Good morning, good afternoon, good night. Welcome back to another schema scalper video. In today's video, we're going to be looking at trade 3 and then also trade 4 of day 2 of the 100k funding challenge with funding pips. So the time it's entered at 3:20 p.m. and that is UTC plus 2. So we are looking at 8:20 a.m. This is New York Standard Time. This is what I saw in the chart live. Okay, so we're on a 5-minute chart. So fair value gap as this forming. I saw this low being taken out, and I saw this low of this fair value gap being taken out as well. So to me, that was a real good indication that we're going to continue going lower, and we're not just going to go below these lows and return and go back higher. Okay, boom, let's go back, and now I'm going to tell you how I entered, where I entered. So I saw this big fair value gap down, and I entered right there just because, not because I was scared to wait for retracement. I thought price is gonna run away, but just because I didn't know if the platform was gonna let me get filled here, or if price was gonna hit that, come into the fair value gap, hit it, and run away quickly, so that I don't get a fill. I wasn't worried about it going down immediately. I was worrying about it going up, filling this fair value gap, and then coming down without me being able to enter the trade in time, and then opening up and widening my stop loss, which I didn't want to do. So I entered down inside here, short position. My initial stop was above this candle high, so that's 40 points. That's a large stop. Just make sure it was, yeah. And my initial take profit was down here at this low. That was 216 pips, points, handles, whatever you want to call it. 216 points, right? So as I was looking at the 5-minute, so I was already in the position. Now this is how I manage the position. On the 5-minute chart, sorry, wrong day. It was yesterday's trading. On the 5-minute chart, I saw this low with a fair value gap in it. So this swing low formed inside a candle with a fair value gap, and then this low right here is taken out by a candle with a fair value gap. So fair value gaps like these can be trusted, right? I just put my stop above here, above this fair value gap, because I understood that we already took liquidity. I can trust this fair value gap, but it could spike through into this one and then return lower instead of just stopping where it actually stops. So I was putting my stop where I was prepared for a run up higher. Oh gosh, that wasn't where my stop was. It was a bit low actually. It was on the candle high. Yeah, that's what it was. And this was for 1%. So 34 was 1%. and my account balance, I was on positive 4.5% with this trade before opening this trade. So I had confidence in this fair value gap. I had confidence that this was now going to be a breaker, so I could measure this high to this low and get projections. So I was confident that it's going to hit this -4. So I have positive risk to reward. My risk to reward is 6-1. As price moved away, and it did so super aggressively, I moved my stop to just past break even at this point, and I'll show you how I managed it on a 1 minute chart. Okay, my stop was just past break even, so I don't think you can do it more. Yeah, let's leave it there. I'll leave it there for now, and I'll explain to you how I moved my stop as time went on. So we've got the 10 o'clock candle pushing up higher. Now this large wick, I was expecting something like this, but I was expecting it to actually push further into this fair value gap, and then I used that as a measurement, and I knew this high was important. So depending on how we push through this high, because this is the highest swing high inside this fair value gap at the moment, depending on how we push through the swing high was going to tell me if I should close the trade, if I should reverse the position, or if I should hold it. With it pushing through like this and coming back into the trade or into the range, I understood that we're going to see lower prices now, and we are probably not going to take out the high of this swing. So this long wick candle, we're not going to take out that high, and then the 50% as well is most likely going to stay intact. A lot of the time with these long wick candles inside fair value gaps or inside other patterns, there's a measurement you can use, and just depending on how long it is, where it is in the range, all of those things, it's usually the 0.75 or the 0.5 level that doesn't get hit, or it gets hit perfectly and just drops down. So I was confident that the 0.5 level wasn't going to be hit, because as you can see, we had one move higher, two swings higher, third swing higher, capture the third into the fair value gap, and then obviously we can see after the fact is a move lower. So now with a move lower, we made a move higher into a fair value gap, and now we've broken that low again with a fair value gap. And now at this point I was trusting that, let me actually zoom in here. At this point, let's do this. At this point I was trusting this high was going to stay intact, but I was also looking at the reaction of the break of this high. So it broke this high with a fair value gap. We're looking for lower prices. The market has shown its hand that it wants to go lower, but there's still indications that we could have larger retracements before the price leg lower. So this is an indication, one of the indications of that. So this candle, it has a fair value gap, swing point inside fair value gap, and then another fair value gap taking it out, taking that swing point out, right? So I was expecting a further retracement, and how far into the next fair value gap that's higher. So inside here, that's how far the retracement I was expecting could go, and then up to this 50%. So the 50% was, I'm looking at that as that's the mark in the sand. That's where the market is probably not going to reach for any further. So at that point I opened up a buy, I think down in here, just in case it went up to the 50% and I could just close it. But it was a really like low risk buy, low risk and low leverage. I think it was like 0.25%, and I just stopped after I saw the reaction inside the fair value gap here. I just closed off the trade, and you can see it on my results. There's a buy 523. Where's 23? Yes, 23. I bought inside that fair value gap. I thought it would run higher, take this highs and then push down, but it didn't, and it came back. And I just put my stop at break even. Got stopped out at break even, or just under break even, $5 loss. Right, and then I let the position go. So that right there, liquidity void, I was expecting that to hold, not immediately, but to hold price so it doesn't go lower. Obviously I was expecting price to go higher, touch this 50% and then drop lower, but we didn't have that. We just had it consolidate inside these two ranges, from this fair value gap and this fair value gap, consolidate inside that before breaking down and then retracing to that liquidity void, and then later hitting my target, which I adjusted my target after I saw this. So I wasn't doing it with a Fibonacci in that moment, but I was doing it with a naked eye, just because the market was already moving and I didn't wanna exit without maybe catching the bottom. So I had, let's make sure where I exited, 545, 45. So at this point I exited down here, and seeing with the naked eye that this lines up with the -2 standard deviation of this price swing here. So it's this low, this high to this low. They're both inside fair value gaps, and it's a run to take out swing high when you know you're looking for downward prices. So if you didn't take this trade, like from where I took it, and you want to enter late, you could have taken a short inside this liquidity void, stop above the high, because they already took out the people who are in early, and this would be a take profit. That's a 1 to 4, like, so simple. Yeah, and with that I passed my funding challenge phase 1 for funding pips. As you can see, plus 3825, minus 500, minus 500, so that's 1% minus. This is plus 3.825%. and if you guys watch my previous videos, you'll know that I ended day 1 on 5.5% profit, and this 2.5% just pushes me over the required 8%, which is right there. With that being said, I hope you guys enjoyed the video. If you have any questions, please do comment below. I'm trying to get through all the questions that I've got for myself and just trying to put it out there in video form, so that next time I ask myself a question, should I do this, I can just revert back to a video and say, hey, this is the way this is to be done, because right now I cannot trust my memory. Cheers guys, have a good one, be safe.